Alright, by now you should all have a second monkey system. Remember that was your homework again, so 2 weeks in a row to make a second system, and I said I'd give you a second system. The first system we made was put together by you. We took a different component from each person and we said, okay, let's put it together and see what we can mix up in our cooking pot. And we did that last week, and then we went away for a second week to make another trading system. So I hope each of you have built this week a trading system as well, another monkey system. Now I'm going to share with you mine very quickly, and this one was one that we talked about in the workshop, but I just wanted to put some absolute detail to it. So it's been a while since we've been on the E-mini chart, the S&P, or for me anyway. So we're on the S&P 60-minute chart, and I'm saying a pure bias. So a pure buy bias for longs and a pure sell bias for shorts. Let me just remind you what the bias... Oh, here it is anyway. So a bias is a 100 simple moving average on the bottom, a 50 simple moving average above that, just have a look on my right there, and a 20 simple moving average on hourly above that. The faster the moving average, the brighter the colour. So a buy bias, of course, is 20 on top, then 50 in the middle, then 100 below. And a sell bias is 100 on top, 50 in the middle, 20 below. So to my right on the screen you can see an example of a buy bias. And the example in the workshop that we touched on without going into too much detail was, okay, what about if it was at the 10 o'clock candle on E-signal or the end of the 11 o'clock candle on Ninja? Same thing. And we had the candle completely above the top MA, and it was the sensible and logical colour, being green for buys and red for sells. So here we would say, well, that there is of interest to us. And I'll quickly remind you again, we like monkey trading systems because the markets are very sophisticated, very intelligent, and will only get more so as the years roll on. And so rather than trying to have elaborate and wonderful trading systems ourselves and being gurus, we think of ourselves like this guy as really thick monkeys. But in doing so, we are dumb enough or smart enough to know to be dumb, which means, okay, by acknowledging that we aren't very bright and we think, okay, how will we survive as not very bright traders, we will create very, very, very simple systems that work well, and so we'll survive the long run. And so, in fact, I would say by taking on such an approach, you outsmart 99% of the participants, because few think of going the opposite direction to outwit everyone. So, the hallmark of a monkey system, as you would know well, is to pick a certain time every day, and either the opportunity is there or it's not, and you wait till the next day. And to which I've heard some traders say, oh, not enough signals, I need more. Well, we layer our market move systems, so why couldn't you layer a monkey system as well? So you would have one idea, two ideas, three ideas, completely different ideas based on completely separate hours, but you might have 3 or 4 hours you keep an eye on with completely 3 or 4 completely different systems. And it just means 3 or 4 times a day you check that chart, the opportunity is there or it's not. I've said here, pure buy bias for longs, pure sell bias for shorts, not wicked. This was honestly an idea that just popped into my head. I quickly tested it, it worked brilliant, and I did that about 2 months ago, I think, and it's continued to work really well, which is nice. But there's an element of how it's worked that is key, and you must pick up on this tonight. The correct candle colour, of course, and it's at the end of the 11 o'clock candle. A 4-point profit, 3.75 stop on the ES. And then I've said here that I've tested it from December last year all the way through. Again, not many trades, but we've just had a look at the 11 AM candle every time, and it's coming through at 75% success. Now, what I don't have here is max stop-outs in a row. Max stop-outs in a row is 2. If I get more than 2 stop-outs in a row, then I would say, okay, the system's over. Another way I'd also say the system's over, and this is more subtle, this is a key detail. When I built this thing 2 months ago or 3 months ago, I was able to have a 4-point profit. Sorry, I was just doing ticks to point conversion on E-minis, took me a while. So for profit, there's our profit, I'll put a P for a profit, and a 2.75 stop. And what I noticed just bringing this up to speed recently is still a very nice monkey system, but you need a for profit 3.75 stop. So it's still nice because it's a true 50-50 in that your stop is one tick less, so if you were entering at limit, and I'd actually encourage you to enter at market, it's still 50-50 because of that one tick difference, benefit profit to stop. Now if someone's not clear on limit and market entries and why you do one or the other, or if they've been over-educated into the reasons of entering at limit, and you would question why on earth I'd recommend entering at market, please type that in, that you're not clear on it, and I'll go on a 5-minute rant about that. But otherwise I'll continue. Now, the key point we're discussing here is we said max stop outs in a row is 2, that's when we'd know it's over. Max stops 2 in a, sorry, I've got to get a good writing pen. Okay, so as you're aware, you're interested in how many stop outs you've had in a row because that's key for when you stop using a trading system. But the second, and also a real stumbling block for a new trader is they don't know when their trading system is over. And often the people who taught them the trading system don't know when it's over either. And so it means that the learning trader, the beginning trader, grows their account, and then maybe one of the trading systems becomes average, but they're not sure should they trade through the tough period and keep going, or is it time to just pull the curtains on that particular trading plan. And because they don't know, they more often than not, human nature set on default, operate on this thing called hope, and they hope their way through, that it's just a tough period. They're a bit emotionally attached to their plan because they put a lot of hard work into building it, but in fact the plan is over. And so they actually do themselves damage because the plan just goes very average. So one key way we have of saying when a plan is over is we have maximum stop outs in a row. Historically, if it exceeds that, something's really up. What I want to draw your attention to here is a more subtle detail. When I created this 2 months ago, as I said, 4-point profit, 2.75 stop, worked, no worries. Then what I found is to accommodate the moves, it kept coming close to my stop every time, closer to my stop. So every time it came closer to my stop, in this case I would say, alright, well, I will always keep 2 or 3 ticks away from it. So I'd always review it with every new trade that came through, and I'd be like, okay, the stop needs to be slightly larger. Now it's pushed it out to a point where it's 4 profit to 3.75 stop. Now if someone wasn't smart enough to review with every new trade, you can see that they just learn the hard way and start just getting stopped out in every time. But there's a subtle detail right there, which is with every new trade, just if it does give you a lot of heat but then turn and didn't stop you out, just consider, okay, did the overall market move still occur, but it just fluctuated slightly deeper into the fluctuation on its move that I was expecting? If so, I just need to have a slightly bigger stop, as long as my stop is still smaller than my profit. Yeah, you can see that something's changing. Perhaps the profit is growing as well, which means, okay, if the profit can grow by a point as well over that time, that's nice. But there's this slow change going on. And what that is that's like the waves of the sea slowly changing the line of the beach. It's going to happen. It's going to slowly change. You can't just have a rigid trading plan 3 months from now and expect it to be identical to now. Okay, I'm saying it should be pretty close. You might only have to make a very slight adjustment, and this is the only type of adjustment you'd need to make, is just watching something like this. Now this is more so with E-minis. With FX, same sort of concept, but you can, because we're just going for such monster moves, let's say, if I'm going for 80 pips and 80 pips on hourly, I wouldn't bother adjusting a thing like that, okay? But this is really noise. I mean, 4 points is just a very small move, or smaller, in or out in an hour or two. So I would think of these type of things. But anyway, my point is, the stop is just slowly ebbed wider, So, okay, be clear of that and just see that happening and move your stop and just widen it first before it starts actually hitting it. And the stop is still smaller than the profit, so that's nice as well. Also, as it's starting to approach 4 and 4, then it's even, then you're going to ask yourself, okay, is it time to get rid of this one because otherwise my profit and stop ratio I'm not going to be happy with anymore? Or can I also enlarge my profit? So you are growing and changing. You are being dynamic with a dynamic market. I'm not saying change your trading plan after every trade. Not at all. There's a big difference here. I'm saying keep your trading plan and stick to it. But I'm saying with every new trade, you got to ask yourself, okay, yep, the move I was expecting, the pattern I was expecting, the way it lifts and drops is still lifting and dropping much the same, but it was just lifting and dropping with more amplitude this time, but still within what I expected, so I'll accommodate that. And each time you just might watch that amplitude is starting to increase a bit, but the move is still there. Or, the second question, it's not there at all. What was there, I expected a lift and a drop or something like that. In this case, I expected just the thing to rise if it was going to drop maximum sort of about 3.5 or 3.25 ticks, but then rise up nice and healthy. Is that just absolutely not happening anymore? It's completely stopped. Okay, in that case I would also draw the line and say it's over. If I can look recently and say it's just that pattern is just not happening, it's not happening, I'm going to face up to the fact and ditch it. Now it's really important because you'll have trading plans and you'll have trading plans at work and you'll be making money from your trading plans. Okay, great, well done. Most traders don't even get that far. They don't, right? Already you're in the top, I don't know, 10% because you've got that far. And most would pat themselves on the back and go, finally, wow, I've done it. It's like, no, congratulations, you've made it to step 1. Now, the finer details you're going to have to become good at, which is when is the time up for it. And so maximum 2 stops out in a row is a very mechanical black and white way of measuring it. Maximum of 3 in a row on any given system is the maximum I would allow. But having that figure there historically gives me an idea when it's up. In addition to that, watching the thing just slowly change and little things sort of evolve like what I gave you in this example. Okay, in the example I gave you, the stop was just slowly, on each trade, just slowly ebbing out, and I was accommodating that. I was slowly moving my stop on each trade thereafter because I thought, yeah, it's just getting a little more dynamic. I was happy to do that. I'm not, people say, oh, it's bad to widen your stop. I wasn't doing during the trade. I'll stick to my guns and have whatever it is during the trade, but after the trade I'll say, okay, that came quite close. For the next one, I'm willing to make my plan so it's just a little bit larger to accommodate, and it's still smaller than my profit, so I'm still happy with it. So you're being dynamic with a dynamic market. That's the system. Now let's just go have a look at a few. Alright, there's one there. Okay, so at the end of the 11 o'clock candle, we had a buy bias. It entered me in at the bottom of the candle, got me out at the top. Now the first thing I notice is, guess what? There's certainly more than 4 points in on that. So while my stop has needed to be slightly bigger recently, but still smaller than my profit, perhaps there's an opportunity to go for much bigger profits. Also, let's go have a look at another one. Alright, here we go here. In and out in the same hour, that's very nice, but we're seeing that really it's going for a lot larger moves, and same again. And the reason that the candles are now becoming a little bit average, you'll notice they're getting a bit bitty around here, okay, a little bit like Lego blocks, is because, remember, the contracts roll, and that's actually the previous contract, the 0909 contract, not the 1209 contract. For the years, every 3 months they roll or change over, and your module in your e-course explains that. So at a very quick look, it's like, hey, wow, maybe my profit could certainly be a point bigger as well. Excellent. So now I've got that ratio back. It probably could be another 2 or 3 points. Wow, that's exciting. Alright, that's mine. How about yours? How did your system go that you made this week? I'm just teasing you. I'm not going to ask you to tell us your system. John says, Greg, have you tested this system under FX? No, I haven't, John, but I would say absolutely go have a look at it. How would I describe the FX market? I won't make a generalization. I was just going to make one comment along the lines of how the FX market moves. It just has a slightly different personality, so you'd need to examine it. I haven't built a system that's on the 11 o'clock candle with the buy and sell biases for the FX. Karina says she's got a few of these and she reckons they're great. Good work. Your homework for next week, I want you to make a study of the MACD. Okay, I want you to build systems with the MACD. You study, I don't care what course you do, anywhere in the world, any trader you talk to, the MACD you'll find crops into their systems one way or another. So they might say they like a particular indicator. It might be one you have heard of or you have not. Okay, but boil it all down and the MACD is slotted in there somewhere. I was looking at the way that the most common Japanese trading styles recently. They use a thing called a Tinkinson and a Kajinson. Some of you might be aware of those things. And you're like, oh goody, a whole new set of indicators, great, wow. And you look into them, all that, and I'll tell you a little bit about them. But I noticed a lot of people, yeah, okay, these weird and wonderful indicators with Japanese names and clouds and things and slightly different concepts and approaches to how it's all done. And then they've got the MACD there. And I'm like, oh, so you've got all these, U-Butte indicators, but just before you enter, you check that the MACD lines up. Well, haven't I seen that, many times before. So the MACD, for that reason, is a big deal. Spend some time looking at it. Now, let me just close the chapter on Tinkinson and Cajuns and Japanese trading systems and that type of thing. It's probably the most common type of thing you'll see in a Japanese trading room. But I want to close the chapter on it before we have people tearing off thinking, right, that's where I'm going to go learn next. Don't. Please. It boils back to the thing I keep saying every week. Traders who know what they're doing, and actually I've got an excellent email that I'm going to read to you from one of our traders during the week. And it was a discussion along these lines too. But what it boils down to is the market does a pattern and does a particular market move, and it does not matter what indicator you're using to spot that move. What does matter is that you're able to use indicators that you're comfortable with to spot those moves. It's more the focus needs to be, can you find the moves with any type of indicator and get good at trading them? And I'm going to drive that point home if you didn't quite get it then. So that's your homework. That's the MACD. The MACD deserves a lot of appreciation. If you understand sort of how the MACD works just a little bit into the mathematics behind it, it can be sort of thought at in one way as showing you in a simple fashion when more elementary moving averages are getting apart from each other. So on the left here, you can see the 100 and the 50 are quite close, yeah? Just here. And then they're getting wider apart up here. So you could say that the upwards direction is accelerating as the moving averages are fanning out. And what the MACD, with just a very simple line, can represent is actually that fanning out of underlying moving averages you can't see. That's how it's actually working. So you could say the MACD is actually, in crude terms, a measurement of acceleration. And that's why it's helpful, because it's showing you an element of the markets a lot of other indicators don't. So do muck around with it. Alright, what you're looking at here is AUD USD. The trade I had given up hope on when I was chatting to you last actually did turn and work. That was really nice to see. Another trade that I'm actually already in, that I wanted to actually Twitter out. I'm waiting for it to just get up to about the 10400 mark up here, above where I got in by about 30 pips. Because if it gets up there, then I can have an 80 pip stop and a 200 pip profit, which is pretty cool. Not that I want people to copy with live money, I don't, but it's just cool to put that on the chalkboard, which is the Twitter PDF, because you can see from the tweets that it was done at the time, so there's no smoke and mirrors, it was the real deal. And it'd be a pretty nice trade if that one works, so I'm just waiting for that to come up a bit, and that'll be cool to see. Right, MACDs. I want you to click on indicators. I want you to scroll down to MACD and click new. leave it on default for all the reasons why we like default. If someone doesn't know why we like default indicators, type in and I'll explain it. Okay, muck around with all 3 lines. Please just look at them all. Okay, Adrian, the reason why we use default indicators, or you use them on default or pretty close to. So for example, if I'm applying CCI and the default's 14, I'll be like excellent and I'll apply as is, or I might move the CCI close to the period of some of the other indicators. So if I'm working with a 20 moving average and I have CCI, I would actually change the CCI to 20, so it's in sync with the moving average. That right there is a key detail, something you're not going to, people aren't going to tell you things like that. Okay, so bringing them in sync like that where appropriate. But say, for example, you got CCI, and let's just say it's at 14. By you having it on hourly on 14, you're looking at the same CCI as everyone else around the world. If you put your CCI on, say, 200, you're probably the only one around the world with CCI on 200. So you'd be like, excellent, that's good. Trading's about doing not what everyone else is doing, therefore I'm going to be profitable. Yeah, but all the buyers and sellers are getting at certain areas and points because of what they're all seeing. Now, if you're the only one seeing that thing, you're out on the edge by yourself. You're not going to be trading with everyone. You've got to understand at least what the pack's doing. I'm not saying trade with the pack, but I'm saying understand what they do. So you've got to be looking at what they're looking at. So you want to use an indicator that is pretty close to what everyone else is looking at. Okay, MACD on default. So muck around, apply it. I'll just show you what it looks like normal, and there's different ways of using it. Obviously, you've got the 2 moving averages crossing, pointing up, crossing down, crossing up, crossing down. Very nice, and obviously at a crude method you can see that right where we are, that's been working quite well. So let's just make a few discussions here. So you can see it crossed up the green and purple, crossed up through there. Wow, I don't know how I just reversed my arrow like that. Okay, crossed down through here, it crossed up through there, crossed down through there, very nice. Went through chop, through sort of this bit, the 2 of them, and then they made up their mind and kept on going down. Okay, that's one way. Another way of using it is these lines, the purple and the green, coming through the 0 point. Okay, I'll show you, if you're still not sure how to use it, I'll show you a way I like, and I would absolutely recommend you consider doing, is I'm going to edit my indicator now. So I'm going to go to indicators. I'm going to turn off the average entirely. So I'm setting it to transparent. I'm setting the MACD to transparent. And the difference, I'm setting that to 6, because I just want it nice and wide. And OK. So have a look at what now it looks a bit different to your regular MACD, doesn't it? Let's discuss how this would work. So every time it just crosses from below the 0 to above the 0, that's our trading system. So from there going up, and then from here, early on, do you see, well, from even earlier, going down to about there, and so on. And then again, you'll notice we have not avoided the chop, and you'll remember that the moving averages were chopping through. So this difference thing is actually showing you the same as the MA crosses, but in a more simple fashion. It's the identical thing, really. With that, there's opportunities to be smart about this, not just to look at that and go, oh, that's the way I'm going to do it. There's time of day, there's a type of moves, there's support resistance, price action is king. So there's a few things that you've been learning that now hopefully you apply with it and bring to the table for a smarter approach. So that's your quick training on MACD. The reason I don't want to impose particular trading methods or ways with it is because if I did that in your week where you have homework, which is your MACD, where would your mind go as a magnet? It would go to, firstly, the different ways I showed you. So by keeping it pretty vague and just showing you overall, so you've got some idea, it means your mind is completely open, and the things that jump out to you first is where you'll look, which is a great place to start. Plus, the things that you know very well are the things that you've found and discovered yourself, aren't they? They're the things that you get a really good handle on. So with the MACD, you might just find a really cool way that you like to use it with the price. That's your homework. Okay. Back to the slides. The microphone, yes, the microphone. Okay, on the mic. At the end of the 3 months coaching, we're going to be asking you some questions. And the questions are you 100% satisfied with your coaching? Are you now empowered with all you need to know to be a successful trader, if not one already? Successful, as I would tag it, is that you're finishing each month, hopefully each week, but each month in the green. Now, if each month you're making $100 or $200, you are successful. With trading, the success doesn't have to be huge. You don't have to be making $200,000 a year yet. But success is, if you're finishing every month in the green, what it means is numerically you're doing something right. And so when it comes time to numerically up whatever you're doing, the results are going to up and be amplified as well. And that's just something that will come through time. You have to earn the right to do that. If you move to larger leverage too quick, you'll learn a horrible and painful lesson, and it'll serve you jolly right. So you do take your time, but the question is, in question 2, are you now empowered to know all you know to be a successful trader, if not one already, which is just finishing every month in the green, and happy that you'll slowly grow from there. And the third question I will be asking you is, having done this course, do you agree that you don't need to do another one, just apply what you've learnt in this one, in terms of being successful? So that's quite a bold question, that one. But anyway, I'm after 100% yeses from every single client we ever coach, period. So to achieve this, I need to be asking you now, well, we still have 4 weeks for some of you coming through, to see if there's a major hole in the coaching or there's things we need to address. And really, in a group environment, if one person's having trouble with it, there's probably more who are. So it's a great opportunity to say, hey, have you thought of this and that? And other people listening will go, hey, that's a big help to me as well. So you'll remember I asked you guys to get a mic, so I'm going to see who's got a mic and see how you're getting on. I'm not after brownie points or for you to speak nicely about how things are going if you're having a tough time, but I do care that you know or have a fair idea now of how to be on track and be up and going with your trading, even if it's in simulation. So, who's first for the microphone, or am I going to have to pick you? I know who started up early. I'm going to see who's here and whose mic is on. If you're mic shy, microphone shy, no worries, John. John would prefer to type his answers in. Then, yep, you can type your comments in. Okay, Bob's going to go live. I'm going to turn Bob's mic on. One thing I'll check is that everyone else can hear Bob. So Bob will say hello. I'll say, can everyone hear Bob? Otherwise, I'll have to repeat it. And then we'll see how Bob's going. Yam, if you want to jump on the mic, absolutely. Yam, I don't think you're 8 weeks into your coaching. You're only 4 weeks, so you're very early on. So I would expect you to have a few things that you need patched with your coaching. Particularly, I'm targeting people who have 2 weeks. Yeah, exactly. I'll wait. What I'll do, Yam, is I'll wait until you are 8 weeks into your coaching. Then I'll ask you those questions because you've had more time to do the learning. Although I might, because now I'm curious to know what you're struggling with. All right, let's see how Bob's going. Okay, Bob, if you've got your mic on, can you say g'day, and we'll see if everyone can hear you. Thank you. Oh, I can. Can everyone else hear Bob? Very good. Okay, Bob, do I get yeses first to my 3 questions? Oh, mate, that's sensational. I had better not, but I'd love to tell everyone your age, because I think it's oh I mean, it's brilliant. Oh, it's sensational. I'm just so excited. And 27 trades and 3 stop outs, and oh wow, that's wonderful to hear. Very exciting indeed. Now, tell us, with the psychology type of things, is that not more recent? Well, I don't know, nor do I particularly care long term, but recently with your trading, have you had any how would I say, major revelations with your psychology, or has that been pretty down pat and you haven't really had to worry too much about fine tuning, your headspace? Oh, sensational. Well, thank you very much, Bob. I'll turn off your mic now. Thanks for sharing. And I mean that's amazing. Okay, I've turned off your mic now. That is a big help to everyone else, and it can be a little bit daunting at first jumping on the mic, but I'm sure everyone else would very much appreciate hearing from a fellow trader. And I guess where you'll... Order filled. Oh, here we go. Let me just see what's going on. What am I... Sorry, just had a trade. Oh, okay. But at the same time, when I think you'll enjoy Bob hearing from Karina and Jenny and Craig and some of these others too, and so I think it's really valuable that we hear from each other. So thank you for your honesty and thank you for your sharing. Yes, we've got some people totally agreeing, and we've got some people just typing all theirs in. Okay, let's carry on with this, and we'll hear from more of you next week. We're out of time to hear from more of you this week, so what I'm going to do is please have a think about what it is you'd like to mention, and we will get you on the mic next week. So don't think you are off the hook at all. Bob was first out of the gate, but some of you other guys are talking. Now, there's two other things I'd like to talk about. Now, that trade, remember I was looking at, what was it, USD Swiss, and as I was talking to you, I was thinking I'd like to get in if it pulls back up higher, but then my computer systems told me nope. If it goes down and then comes back, I had a move to break even function in there, and it actually just says just hop out for 0 and be done with it. So I'm like, okay, so out I was. It was an example where the computer, see, I mean, I don't mean to talk about the computer side of things, but there's more than just pure automation with it. It can be just automating your backtesting, or you can set it automating alerts, but then you still place it manually. And on that one, that's how I was doing it. Okay, let's carry on. I want to quickly read you an email and my answer. Some of you will be quite familiar with my thoughts on this, but it doesn't hurt to keep going over them just to make the points clear. So here's a typical email from one of our traders, and I think it will probably resonate with most of you. Just wanted to run something by you and get your thoughts. I'm enjoying doing your course with you guys, and I'm getting a lot of value from your style and your approach to trading. Thank you. I'll give that a tick. I'm slowly working through it all and putting all the pieces together. Yep, I think a lot of you are doing that. It's all coming together for you. I'm mainly interested in your high probability market move systems, which I'm happy with the info you have provided. It's nice to see that that resonated with this trader's style. I'll give that a tick. The thing I need help with at the moment is putting together a strategy or a system that I can trade for around 2 hours a day on a smaller time frame and try to take 20 pips a day on FX. 20 pips a day on FX, I'll give that a tick. That's quite achievable. Trading 2 hours a day. Now, let me just put a divider here. Trading 2 hours a day, I'll give that a tick. On a smaller time frame, I'm going to give that an exclamation mark. And this trader, by the way, sees things the way sees it eye to eye to me, so he totally understands that I was going to pull him up on that one. He wanted, nonetheless, to have my thoughts on it, even though he knew my views on that style. I only trade with indicators and love the concept of 2-to-1 profit ratio. I like things to be black and white, so he's just using indicators, great. Loves 2-to-1 profit to stop. Very hard to find, but if you can find that, wow. I would have very few trading systems where I've got to double the size profit to stop, as if it was, easy to do that on every trading system, then all the advanced trading systems around the world would be running like that. So it's ambitious, but it is possible. I like things to be black and white. Yep, absolutely, and he says why too, and I agree. I find it easy to follow the rules with no emotion. Yep, exactly. Then he says, got some good money management ideas, having trouble putting some of it. Okay, so his money management is good. He says he's got good ideas on that. He's got it all lined up, and he can't wait to try those. Yeah, but he's having trouble putting together some indicators that work consistently. The dividing point between the successful and the not is consistency. I say every single trader can make money. Absolutely. They can place a trade and it'll make money. But to consistently do it, I mean, we all know that we will have stop outs, so if you place 10 trades, it would be normal that 3 of them wouldn't work. or in Bob's amazing track record, 27 wins, 3 stops. I'm deliriously happy with that. Oh, I've never heard anything like it. Brilliant. But the point is that consistency there, just each month performing properly, right? Having a bit of trouble just achieving that. Now, I would say he's not meaning he's having trouble with it with his monkey systems and his market move systems. It's with this one, these smaller time charts. I understand I'll have losses. That's totally okay with me. Good, tick. I'd appreciate any ideas you have on it. Well, a tick in that he allowed me to share it with you all, so you can all benefit from it. Now, the thing that made me go, is he's got his market move systems, great. He's got his monkey systems, excellent. But he wants to, 1 or 2 hours a day, is just to see the market moving, it's dynamic, and he wants to just place trades, 1 or 2 trades during that time as well. Why? Well, it's exciting, it's fun, but it's also really tough to do that. Now, what's his outcome? What does he want to achieve at the end of the day? Well, here he's got 20 pips a day. Well, that's brilliant, no problem at all. With market move system, like if I'm placing a trade once a week or once every 2 weeks, then I might take no trades, and then I might go for, like you saw, I was hoping to go for, is a 200 pip move. That was with an 80, if it was the ultimate entry, I'd have an 80 pip stop, 200 pip profit. Brilliant. Okay, 2 to 1 and all that type of thing. Excellent. And my average would absolutely be 20 pips a day or more, depending on how the frequency between my trades. So the 20 pips a day is achievable, but to achieve it this way is a really hard ask. So here's my reply to him. Now, I can see that he's not trying to say, I just want to trade this one way. What he's saying is, I've got 3 different types of trading. I've got my market moves, my monkey, but I do want to trade this third way, which is trading noise systems. I know you don't like them, Greg, but if you were to give me your points, what would they be? Now, this is my comments back to him. As you know, and agree from the start, I'm convinced that the market only produces tradable patterns every once in a while. That right there is so key. Most traders around the world don't appreciate, know, or have even thought about that. I'll say it to you again. I'm convinced that the market produces tradable patterns only ever, like once in a while, not all the time. Once or twice a week on hourly charts, and a similar ratio on any other chart, i.e. 4 times a week on half-hour charts, 8 times a week on 15-minute charts, and so on. At all other times, the market is just moving in new and interesting ways, which appear to be patterns seen before, but truly don't give a particular outcome or edge to trade. They really don't. And then I've said here, having built mathematical models and profit lines to show this for many years now as part of my daily search for a good system, I say my opinion is based on fact, and not understanding this point, right? So not understanding the fact that most of the time it's moving in new and interesting ways. It's not patterns that you can trade, it's just the market's moving, and it's not a time to trade. By not being aware of this, it's the biggest stumbling block for a new trader, the biggest reason why new traders fail, the biggest incorrect sales pitch market educators use to sell product, and is the biggest task I have in unteaching people before I can teach them. So one thing I want people to be really clear on is and by being clear on it, then you can sort of have more intelligent trading approach. Okay, but this idea that you can look at the markets and just turn on any market, any chart, and whatever's in front of you is patterns. Oh, it's bouncing off moving averages, and with my indicators are doing certain things. The idea that you look at that market and you think there's patterns right there. If I knew somehow the stats of those patterns right now, and I had the right indicators, there right now would be a trading opportunity. Rubbish. Absolute rubbish. Okay, and very few people even challenge that thought or think twice about it, but it is rubbish, right? When you look at a market and you turn on, more often than not, okay, with your indicators and with your patterns, the market is bubbling and moving and trading in interesting and new ways, and it appears to be making patterns that you've seen before. Oh yes, look at that, it's bounced off the moving average, whatever. But it's not an edge, it's not an outcome that you can trade, it's not an opportunity at all. Okay, it's just the market bubbling and moving along. And then there are times, and there are patterns that are brilliant, and you do want to be on board. And breaking things down to time of day, so time windows, and thoroughly testing something over the last 2 years will show you the difference. Okay, but it's so important to be aware of that. Now I've said here, I think 20 pips a day, as you suggest, is very achievable. I'm using market move and monkey systems, late if need be for more signals, as we cover in our coaching. So what you're after, very achievable, blah, blah, blah. Now, I got all of that off my chest, but I knew at the same time this trader was crystal clear on it already, okay? Because I talk about it quite a bit. And the reason I talk about it quite a bit is, to you guys, it's becoming pretty clear, but to most, that hasn't even popped into their head that it could be the case. It's in fact the opposite, and that's why they struggle so much. So I said, look, I know you're clear on this. Now, because you're clear on it, but you're stubborn and still want to know how to do that, fine, let's discuss this. So here's how I said, one way to look at it. I said, use the MACD, maybe the difference crossing the zero. Now, remember earlier today, or in this session, I talked about the MACD crossing the zero, so you'd all understand that. And I said, and somehow I didn't want to go into particulars because I wanted to jump out to him and him to own it personally, what he's discovered. Combine it with the apexes, the triangles, the flags, the pennants, but particularly the apexes. That in itself is really powerful. I said, if one insists on having a trading system that provides 1 or 2 signals a night, then this is about the best approach. Because, note, price action is king in this context, right? If you're down in your 30-minute, your 15-minute, or even on hourly, but you're wanting to take 1 or 2 trades an hour, price action is king. Throw all your indicators out. Give the whole lot the boot. If you're going to be trading like that, price action itself is king. Price action as in the apexes. And I said, but if you did want to have one indicator with it, because he did say he liked indicators, yeah, fine, use the MACD, because it's a universal filter. You remember early on I said how universal it is, as it can be helpful when stepping away from the indicators, but still used as a filter for price action, such as with the apex.